Hey traders, Marcello here, founder of the Day Trading Academy. We're here in our beautiful day trading center in Medellin, Colombia. And today we're answering all of your questions in the series of Ask Marcello. If you want to, I'm thinking in Spanish, we've been recording so many videos in Spanish. If you guys want, leave all your questions with hashtag AskMarcello. I'll be happy to go ahead and pull all those questions for you. And also don't forget to subscribe here on the channel. I'll be more than happy to go ahead and pull all the questions that some of you guys might have. This question here is from Missy Day Trader. I assume you're female, Missy. One thing I do want to tell all of you guys is I personally believe that women are better traders than men. The reason why is because women are more emotional than men, so they have more practice, let's say, in handling their emotions, whether it's consciously or subconsciously. The idea is that they have more experience managing their emotions, whereas men, you know, we don't really do anything emotional at all. So when we go into trading, obviously that's the first time that we get into actually learning about our emotions. Maybe not the first time, but obviously when we really have to get into looking in the mirror and solving those demons inside. So Missy, just want to let you know that. Missy, the question is,
how important is pre-market analysis? My trading day starts at 6:30 a.m. here in California. I know I can look back to see what the pre did, but should I get up at 6 to watch the ticks?
My pleasure, Missy. Thank you for the feedback on the videos. I'll keep doing them for you. So there's a lot of different ways to day trade, Missy, and I don't want to say that there's one better way to do it. So I think that we've had a relatively good amount of success at the Day Trading Academy with the way that we teach, and I think it really depends the way that you're going to trade. Let me put it that way. So if you're going to trade things like Forex, which I don't recommend for beginners because I don't think it's a good market for beginners to trade, then you probably need to have a little bit more of a pre-context of what's happening, right? And it's a little bit more difficult because then you have to watch a lot of things. I personally believe, in my humble opinion, that it's better to simplify the process to learn how to trade, because most people think that trading is technical. And the reality is trading is psychological. I'd say 85–90% psychology rather than, and 10–15% technical, rather than what people think trading is, which is the 20 screens, 20 charts, waking up at 4 in the morning, some people to try to trade Forex, to catch that one trade, adding all of the indicators in the world when they don't really matter. What we should be paying attention to is the price action, right? So the way that we teach our traders, Missy, is that you have to just understand what happened that day. There's different time frames in the market, and when you're trading with ticks, and for those of you guys watching this video that don't know what ticks are, tick charts are charts by transactions, transaction-based charts, rather than time frame charts. Candlesticks, for example, you guys have 1 minute, 3 minute, 10 minute, 30 minute, 60 minute. So in a day, you can have the highest volume volatility on record, and you still see 8 bars, 60 minutes, 8 bars of 60 minutes, 8 60-minute bars, 16 30-minute bars, 48 10-minute bars, but you don't see anything different. Whereas with tick charts, what you're able to see is all of the transactions that are placed in the market. So if you have a high volatility or a high volume day, for example, where the market essentially, what happens is you get more opportunities because more people are trading, then you have a much higher volume of bars that you see because they're based on transactions rather than time frames. On the flip side, if you have less transactions, this past July, we're in 2017 now, past July, past August, we had the lowest volatility on record. You still see the same 8 bars in 60 minutes. So how are you going to trade when you're not able to really see the information, right? So another thing that I think I should include as well is obviously there's powers in the market, whether you want to call it manipulation or professional traders kind of moving the market around with the orders they put in. I personally call it manipulation. You can literally see the manipulation in the tick charts rather than just seeing time frame charts where you just see 1 minute, whereas in 1 minute bar, we can actually see 1 million transactions. So that's kind of the explanation of that in case you guys don't know it. So Missy, in terms of time frames, when you're trading with tick charts, you have kind of the immediate time frame, what I call kind of the medium time frame, and then the longer term time frame. If you're trading with something like a 3,000 tick chart, it's a much, much longer time frame, right? Whereas if you're trading with something like a 100 tick chart, and it depends on the market as well. So what I would recommend you do, Missy, is obviously choose the chart you want to trade with and only look at that day. Don't look at the day before. Because when you trade with tick charts, you're trading in such a small time frame. Some people actually consider it scalping. You literally looking at the minutia of the market because you're looking at every single transaction rather than just looking at a 1 minute bar or 3 minute bar or 10 minute bar. So what I would recommend, Missy, is that if you're waking up at 6:30 or the market in your time opens up at 6:30, then what I would recommend is being ready to go by 6. Which means you wake up at whatever time. In my case, it would be 5:50, 5:55, walk to the computer, sit down, and then you do your pre-market analysis, or what I say kind of your process to get started trading. We have traders that, they do visualization, they do deep breathing, they take walks, whatever your process is going to be. And your literal pre-market analysis, I would say, should be no more than 5 minutes. That's all you need, really. Once you start to obtain the consistency in the market, then at that point you can start looking at the day before and looking at much farther time frames to take different kind of positions. But I would definitely recommend, Missy, that you only look at the day, simplify the process. 5 minute pre-market is literally more than enough. I'd say with the market we're seeing now, where there's not a lot of activity because we're at record highs every week, no more than a minute or two is more than enough. So I hope that answers your question, Missy. Again, if you guys have any questions, don't forget to leave it with Ask Marcello, and we'll talk to you guys soon. Have a great one.